futures traders on the new Bitcoin contracts at the CBOE and CME exchanges are quietly building a large short position in the product. It settles to cash, and not actual Bitcoin, so it remains to be seen how effective they can be. In retrospect, the launch of Bitcoin futures 1 month ago has proven to be a modestly disappointing event. While it helped send the price of Bitcoin soaring as traders braced for the institutionalization of Bitcoin, the world's most popular cryptocurrency has stagnated since the beginning of December, when first the CBOE then CME started trading Bitcoin futures, trading in a range between $12,000 and $17,000. And while Bitcoin futures markets volumes have been lower than most had expected, the past 4 weeks have provided enough data to observe how volumes and open interest have evolved. We discussed previously that Bitcoin futures were off to a slow start in the first week of trading, with volumes of CBOE Bitcoin futures averaging just around $40 per day, despite intense media hype helping fuel heavy trading when both contracts launched, at least in the first hours of trading. Since then, volumes spiked briefly in the following week, coinciding with the launch of the CME futures, with volumes on both exchanges at relatively similar levels. Then, as JPM's Nikolaos Panagurtsoglou shows, after a spike in volumes to around $200 million on 22nd of December, which saw sharp swings in underlying Bitcoin prices, volumes have averaged around $50 million and $60 million per day on the CBOE and CME futures, respectively. 1 month after their launch, futures trading volumes remain very modest compared to average Bitcoin trading volumes of around $15 billion per day since futures contracts were launched, according to CoinMarketCap.com data. While open interest in both the CBOE and CME contracts has risen steadily, it too remains rather modest at around $60 million and $70 million, respectively. Putting futures volumes in context, on Friday, the combined size of the Bitcoin futures markets at the two exchanges was roughly $150 million, measured in terms of the value of outstanding contracts, while the total value of all Bitcoins in existence was around $290 billion. Another factor behind the slow volume growth may be the reluctance of many Wall Street banks to touch Bitcoin futures. Firms such as J.P. Morgan Chase & Company and Bank of America Merrill Lynch haven't offered their clients access to Bitcoin futures. Another notable observation, with both volumes and open interest between the two sets of futures contracts converging, it suggests that a large degree of arbitraging of price differentials has taken place between the contracts, which initially showed significant divergence. As JPM further notes, when trading in the CBOE futures initially started, a striking feature was the wide basis between the futures contract and the underlying Bitcoin prices, which intraday exceeded $2,000 or more than 12% of the underlying price at the time. While traders provided numerous explanations for the spread, since then the difference between futures prices on both the CBOE and CME contracts and underlying Bitcoin prices has narrowed significantly, chart below, and even turned negative briefly last week. Thank you for watching. If you enjoyed this video, then please subscribe to my channel.